Hello, everyone. In this session, we will cover the self-employment tax. The self-employment tax is an extension of the FICA taxes. We covered the FICA taxes in the prior session. FICA is Social Security and Medicare. So what's the difference between self-employment tax and FICA tax? Well, guess what? When you're self-employed, it means you are not an employee. You are the owner of the business. And remember, FICA taxes is paid both by the employee and the employer. So we call it self-employment tax to illustrate, to make the point that the owner of the business is the owner of the business, is the business itself, and the employee. Therefore, they have to pay both portion of the FICA taxes. We call them self-employment tax. Now, although they pay both portion, the employee portion and the employer portion, they will get a deduction for the employer portion, and we'll see how this works. So let's go ahead and get started. Before we proceed any further, I have a public announcement about my company, farhatlectures.com.
Farhat Accounting Lectures is a supplemental educational tool that's going to help you with your CPA exam preparation as well as your accounting courses. My CPA material is aligned with your CPA review course such as Becker, Roger, Wiley, Gleam, Miles. My accounting courses are aligned with your accounting courses broken down by chapter and topics. My resources consist of lectures, multiple choice questions, true false questions, as well as exercises. Go ahead, start your free trial today.
So when we talk about the self-employment, it means someone is self-employed. They don't work for someone else. Who are we talking about here? We're looking at freelancers, independent contractor, and small business owners, or simply put, business owners who work for themselves. Remember, the self-employment tax, as I mentioned in the introduction, is composed of the Social Security and Medicare, plus the additional Medicare tax, which is FICA taxes. But think of it, FICA taxes for who? For self-employed individual. That's why we call it self-employment tax. These are similar to the FICA taxes withheld from the paycheck of regular employees, but the owner don't get a regular paycheck. They don't get a paycheck. So what do they have to do? They have to pay their taxes. So what they do, they pay their taxes separately because they don't get a paycheck from their business. So what they do, they have to fill out a form, self-employment tax, and send it on regular basis. As I mentioned, self-employed individuals are responsible for paying both the employer share and the employee share. Because if you're self-employed, you're both the company and the employee. This means that self-employed individuals pay double the FICA rate that an employee pays. So if the employee pays 6.2, the self-employed individual pays 12.4 for Social Security. Same thing for Medicare. For Medicare 1.45, the self-employed individuals pays 2.9. So for employees, why do they pay half? Because the FICA tax is split between the employee and their employer, each paying half. Self-employed individual bear the full burden. So the rate for self-employment tax is 15.3 for self-employed individual. How do we come up with this 15.3? Social Security is 12.4. And remember, for 2024, as we talked about in the prior session, this number will change every year. There's a wage limit. It means up to 168,600. You pay Social Security tax, and you don't pay after that amount. The Medicare is 2.9, and there's no income limit on Medicare. Now remember, if you are an employee of the 12.4, you pay 6.2, your employer pays 6.2. Same thing with the Medicare. You pay 1.45, your employer pays 1.45. However, if you're self-employed, you are both the employee and the employer, therefore you pay, the rate is 15.3. Now there is an additional 0.9% Medicare tax on self-employment that exceed 200,000. Now for joint filers, if you're married filing separately, it will kick in at 125 if you're self-employed and 200 for all other filers. So this is again in addition to the Medicare tax. Now, do all individuals self-employed pay this tax? And the answer is no. You have to make 400 or more in self-employment income for this tax to trigger. So simply put, if your profit is $300 from your business, you are not responsible for self-employment tax. 400 or more, and this tax will kick in. Now, as I mentioned earlier, that yes, you do pay both. You do pay 15.3. However, you do get a tax deduction. Now, how much is that tax deduction? Now, I'm going to explain this tax deduction in more than one way, but it's easy. I'm going to get to a point where you understand it. In a sense, you understand the number. So I'm going to throw a number first. Only 0.9235 or self-employment is subject to tax. Now you might be saying, where is this number coming from? What is this arbitrary 0.9235? So this is what I'm going to do. I'm going to take 100% of your income and subtract the number, come up with what's left is 0.9235. What is this number? Let me show you where is this number coming from so you understand how we come up with 0.9235. So it's not arbitrary. If we take 100% minus 92.35%, 100 minus 92.35, and that's going to give us what's missing is 7.65. What is this 7.65%? Well, if we take the difference, 7.65 is 6.2 plus 1.45. So if we take 6.2 plus 1.45 equal to 7.65. So what are we saying? What we're saying is this. You take your self-employment income, you take your profit, whatever profit you made, then we're going to give you a deduction. Profit minus a deduction. What is that deduction? That deduction is 7.65 of your profit. Why 7.65? Because we're going to allow you to deduct your portion, not your portion, your employer portion. Remember, the self-employed individual pays the employer and the employee. Yes, they pay for themselves and for their business. The employer portion gets deducted. How much is that employer portion? 7.65. Why 7.65? Because 6.2 plus 1.45. Remember, 7.65 times 2 will give us 15.3, which is the total self-employment tax, but you are allowed to deduct 7.65. So this is where the 92.35 comes into place. Simply put, self-employed taxpayer can deduct half of this self-employment taxes paid from their adjusted gross income. How does that half is reflected? You take your profit times 0.9235 and you come up with that. Don't worry, we'll work an example. Let's work an example. In 2024, Michael is an engineer with an annual salary of $200,000 from a tech company. He also operates a part-time consulting business reporting net income of $30,000 on Schedule C. So let's compute the Social Security. Well, there's a cap on Social Security for 2024. We'll take the cap, which happens to be 168,600 times the Social Security rate, 20,905. Now remember, this is paid by both the Michael and his employer. This is split in half. This is the total. Just want to let you know this. Medicare, the same concept. However, the 200,000, the full amount is subject to 2.9. Again, Michael pays half of it and his employer, his company, pays the other half. So Michael doesn't pay the full thing. I just want to make sure you're aware of this. Now, since Michael's salary exceeds the Social Security tax cap of 168,600, he doesn't have to pay any additional Social Security on his consulting business. Why? Because he already paid Social Security. So every individual per year, they pay the cap, and Michael already paid the cap. So his entire salary and Social Security has been handled with the withholding for as far as Social Security is concerned. Would he still have to pay Medicare? And the answer is yes. There is no limit on Medicare. Michael would still have to take 30,000 times 2.9%, which is $870, and Michael will still have to pay the 30,000 times 0.09, which will have to pay an additional 270 for the additional Medicare tax, because that's an amount that Michael earned above 200,000. Okay, so I want to make sure you're aware of this. Now let's change the scenario a little bit. Let's assume Michael's salary is only 80,000. In other words, he earned 80,000 from his job and 30,000 from his Schedule C. Well, all of his salary from his job is subject to Social Security. Again, this is split 50-50, 9,920. All his earnings is subject to Medicare times 2.9, again split between Michael and his employer. Now, for Schedule C, here's what's going to happen. We're going to take 30,000 times 0.9235%. We're going to take his profit multiplied by 0.9235. What's left of it is 27,705. So this is the self-employment income after tax deduction of half of the self-employment tax. Now we're going to take this amount multiplied by 15.3. Why 15.3? Social Security 12.4, Medicare 2.9. Remember, Michael, he's self-employed, he's responsible for both. Then he's responsible for paying 4,238. Okay, in other words, 30,000. Let me show you how we came up with this 27,705. So if we take 30,000 times, let's assume we took 30,000 times 15.3. Remember what we did here is we took 27,705 times 15.3. Let's assume we took 30,000 times 15.3. Michael would be responsible if we took the gross amount for 4,590. Remember, Michael can deduct half of that. Half of 4,590 is 2,295, which is deductible. Therefore, if we take 30,000 minus 2,295 will give us 27,705. So I just want to show you that we take the 0.9235 of the profit times the full rate. I just want to show you how I came up with this in more than one way. So I took 30,000 times 0.9235 and I said this is the amount subject to self-employment. This is taken into account the deduction. But if you want to see where the deduction is coming from, Michael would have to pay, actually he'll have to send 4,590, then he will get a deduction of 2,295, then the net will be 27,705. So I hope this makes sense, that you see where the computations are coming from. In other words, I could have also did this. I could have also here, we could have done is I took 30,000 times 0.9235% times 15.3%, or let's keep it all decimals, 0.153. I'll come with the same answer because what I did first, I only have what's left, 0.925 of the profit times 15.3. I did it in more than one way to I want you to see this computation from both ways. Like, okay, if I did the gross amount, then I have to take half of the deduction. What would be the amount subject to Social Security, 27,705. I hope this makes sense. I hope that you were able to follow. Once again, don't worry about the cap, the rate for FICA, whether you are an EA student or a CPA candidate or an accounting student, the concept is the same. Make sure that only 0.9235 of the profit is subject to Social Security, and the reason is because you can deduct half of your Social Security. Half of your Social Security is 7.6, composed of 6.2 of Social Security, 6.2 plus 1.45, which is 7.65. And the 7.65 gives you a reduction in your profit by that percentage, a deduction to your profit. What should you do now? You want to go to Farhat Lectures, look at additional MCQs. That's going to help you whether you're studying for your enrolled agent CPA exam or some other professional or accounting courses. Invest in yourself. Good luck. Study hard. And of course, stay safe.